Is a rate reprieve coming? Should you be ready to be back in the market? It's the November Denver market update. Hey everyone, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. Let's run through these numbers and then we'll talk about what's actually going on in and around us in the Denver market. Buyers put 3,200 homes under contract in October. That's 400 fewer than the month before. And it's a 38% drop from last year. We saw 3,300 closings in October, 700 fewer than the previous month, and down 19% from last year. October brought 3,600 new listings to the table, but that was 1,300 less than the previous month. That's a 26% drop from that month and then a 28% drop from the year before. We ended October with 6,900 properties for sale, which is actually exactly the same number that we ended September with. However, our months of inventory did change. In September, we had 1.72 months of inventory. In October, we crested 2 months of inventory. Our official number is 2.1 months of inventory, and the last time we were over 2 months of inventory was spring of 2013. So we're just roughly 5-6 months shy of hitting the 10-month anniversary of having that much inventory available in the Denver market. Now, the average days on market didn't really shift that much. It went up by 2 to 28 days from the previous month. And just like last month, it's exactly twice what it was at this time last year. The median days on market did not change. It stayed steady at 17 days. So what about home prices? Well, the average list price to sales price ratio did not change much. It dropped by 0.1% to a flat 96% list price to sales price ratio. The average closed price for all homes last month was $653,000. That is down $10,000 from the month before and still up 8% from 1 year ago. The average single family sold price for last month is $732,000. That is down $9,000 from the month before and up 8% from 2021. The condo and townhome average price is $474,000, down just $4,000 from the previous month, and also up 8% from last year. When we flip over to those median sold prices, we see that for all homes, the median sold price was $568,000. That median is down $7,000 from the month before and still up 7% from last year. For single family homes, the median sold price is $622,000, down $5,000 from the previous month and up 7% from last year. Condos and townhomes have a median price of $403,000, down just $2,000 from the previous month, and they are up 8% from 2021. All right, so what are your takeaways? What's the market looking like? Well, pace-wise, the market has really held itself steady, right? Days on the market, median and average days on market really hasn't changed, and the price shifts are more moderate than they have been in some of our previous months. We're somewhere in and around the 1% change, and we're holding steady at 8% above last year's numbers. Given where rates have been, are you surprised that we closed more than 3,000 homes last month? That doesn't include most new construction. That doesn't include Boulder. It doesn't include a lot of the foothills mountain counties. It's really just the Denver metro area and the majority of existing homes that have been pre-owned. According to Freddie Mac, the average interest rate was 6.45% from 1998 to 2006. And on average, nationwide, every year we were selling nearly 5.5 million homes. Right now, an average interest rate that's pushing 6.5% still sounds high to most people after where we've been for the last 2 years. So what number do you think the market's going to have to settle in at for us to get traction and get back to our new normal? I'll tell you this, projections are all over the map for next year. A national economist for my professional association says that he thinks it's another year, maybe 2 years before mortgage rates begin to fall. He, by the way, is probably the most pessimistic. The Mortgage Bankers Association says specifically rates will be 5.4% by the end of 2023. So they give a very specific hypothesis and timeline. Making the rounds in the media and the real estate world is Barry Habib. If you have not seen him, he is shouting from the rooftops that he thinks rates are going to be around 5% by the end of Q1 2023. Whoa, I mean, I would love that. Wouldn't you love that? The market would rebound and be on fire. Buyer demand that is pent up and waiting for rates to fall is palpable. But I don't think the feds are going to go for that, because we would end up right back where we were the last 2 years. When rates have dipped even 0.5%, 1/3%, and bounced toward 5 or gotten into 5, the buyer demand has snapped back. Now, it's possible that Barry Habib is right, because did you see what happened on 11/10, the Thursday before Veterans Day, when the CPI report came out and it was positive? The markets went wild, rates bounced, they came out of the 7% range where they've been for a while, and they went down into the 6s. And in fact, they did not rebound back into the 7s this last week yet. So the positive CPI report really has had a positive impact on mortgage rates. If rates dropped into the 5s, 5.99, 5.75, maybe lower, would it change your timing as a buyer or a seller? And are you prepared for that, especially if it came in Q1 2023? I think most people are back on their heels thinking that this timing change and the mortgage rates are drawn out and that nothing's going to happen for months and months and months. I actually agree with that thinking. I don't think the feds are going to allow rates to drop that quickly, because they know that there's so much pent up demand and that home prices would rebound as buyers pushed back into the market. But what if it happened? Leave your thoughts, leave your comments below. This market is absolutely so interesting right now. Happy Thanksgiving, and I'll see y'all next week.